Hey guys, what's going on? Hope you're all doing well. So I got a great opportunity for you guys today, almost double up from my or 2x from where I look at it. So before we get into that, let me just get into the previous talk we spoke about black box. If you remember, we I asked you guys to have a look at it on 268. Now again, I'm not SEBI registered. I'm not a SEBI registered analyst, and these are not recommendations. This is only for educational purposes. So if you see, I said that what black box is going to do is going to do this, something around this and give a breakout here, then you're going to have a good target. And I guess the target I spoke about was somewhere in the range of 500. So that target is still on. Let me just show you where we are now with black box. So I think it's still a reasonable. I mean, you can wait for a small correction since the kind of jump it's done is pretty crazy. Let me just show you what it has done since then. So 260 was where I asked you to enter the price, I mean the stock, and now it's around 350. It did go up to around 380, but yeah, even the diagram is still there what I drew for you guys. So it did it a little earlier than expected. So let me tell you from, let me just explain to you how I got this. So it's very simple. So what I did was I kind of understood that this over here, there was already a pattern. Let's delete all this so it'll become easier for you guys. Let's delete all this. Let's get all this noise out of here. So what I saw first was this pattern over here. You see this right here. So this gave me an indication that, I mean, it already gave us a breakout. So if you see that there's a breakout around here, right? So this was already done. So we knew this was going up to here. So this is the target one. So let's just keep this here. So target one is almost achieved. So what happened with target one is it was going to give us another target, target two, but this was not a very clear. This is reverse, inverse head with shoulder. You see this inverse head with shoulder. Let me just draw that line over there as well. So this is an inverse head and shoulder. This is the shoulder, this is the head, and this is the other shoulder. It's not a perfect right shoulder, but somewhat it is. Because you can't expect these to always be perfect, so you must actually kind of, in some cases just understand what's happening there. Because not always, some trades might happen beyond the control of these operators. So this is target number two. And what this has led to is there was more correction here in March and then the election correction. And this, so what this has done is given us another beautiful pattern, a cup with handle pattern with an amazing, huge target of around 537. So this is what's happening. So I would give about 12 to 18 months to achieve this target. That looks fair, maybe 12 months, maybe 18 months, depending on the market scenario. So target one, target two, target three, you got all of them here, and everything seems to be going according to plan. Hopefully, no major correction comes and everything goes well. Now, the stock which I was actually going to talk to you guys about was Ujjivan Small Finance Bank. So firstly, let's get into the fundamentals. I love getting into the fundamentals of stocks because that's what gives me the conviction to invest in it before I get into the technical. The most important thing is to make sure the fundamentals are sound. So looking at the market cap, it's not too big. It's all right. And looking at the stock P, I think it's extremely low as compared to its competition. And apart from the competition, it's also low compared to the median P of the stock itself. The ROC, the return on capital employed and return on equity, is pretty good as compared to its peers as well. If you look at the other banks, look, it's not, you don't look at HDFC, look at other small finance banks. Let's just compare this to something like AU Small Finance Bank. Now, I know AU Small Finance Bank is a bigger bank. Look at the difference between this and this. Sales growth is about 28% and this is about 26. So the growth is similar. So that means the returns, the growth in terms of returns also should be similar, right? But definitely that is a bigger company and apparently AU Small Finance Bank is in a position where it's going to become a proper bank. So yeah, you can't compare. That's why the P is a little bit higher compared to this and it's trading at a much higher valuation. But I think even this is really undervalued. And even if you look at the profit and loss statement, it's just been growing non-stop. There's no stopping this growth. And once the rate cut happens, it'll grow even faster, I'm guessing, hoping at least. The profit margins especially would increase because right now they're operating at, if you see the operating margins have fallen down this year because of the rate being so high, the borrowing rates being high. And their own money is growing, the reserves are growing, and everything seems to be good. And if you go through their con call, everything seems to be fine. Now, this shareholding pattern is something that I also was surprised to see that the promoters have completely gone right. But this has something to do with I think the Ujjivan Small Finance Bank and Ujjivan, the other company of theirs, is actually merging. Ujjivan Financial Services, they're merging. So I think that has something to do with this, but I'm not too sure about that either. But between the two, I think that is a better option to go for. So now, once you see that, let's go back to Ujjivan Small Finance Bank. There it is. Now, once this looks all right to me. There's absolutely no issues with this. And we see the growth of their even the earnings before interest and tax and depreciation looks really great. So let's just get into this is the growth. In fact, this is the growth. This is the growth. So let's get to the technical part of it. Ujjivan Small Finance Bank. There it is. And if you see what has happened is you will see that it has grown exponentially. Let this load, this is taking forever. Yeah, so let's fix this. So what happened is this was actually it gave a beautiful run from this point because this is where I guess the profits were negative. I mean, it was in losses. If you see this was this period after COVID, it was not able to recoup some of the lendings, I'm guessing. So that is when this happened. And I guess once the quarterly results start coming out good like this, the positive quarterly results are doing, moving in this kind of pattern. And you see the different patterns here. There's an inverse head twitch shoulder here, which grows up to become, you know, a bigger inverse head twitch shoulder. But now what happens, I think it gave us a couplet handle, which seems to have broken down. But even then, I think the fundamentals are supporting I mean, this going back here. So this is, you see the body of the cup, and this is the handle of the cup. It's a very small handle, but that's not uncommon. It happens very often and has another upside potential even from this point. But now what has happened is that this has been a breakdown. What I'm assuming is this is probably leading to a bigger handle. So I'm guessing, again, this is just a guess, and I'm kind of hoping because of the fundamentals that this is what's going to happen. This is going to go and give us this beautiful handle, something like this. Because it has tested this resistance point quite a few times. If you look at it on a weekly basis, you'll see that it hasn't really closed below that resistance point there. So this is probably what's going to happen. If you can catch it here, it's great. Just draw a trend line, something like this, and let's have a look at what that tells us. Let's just see. 1 second. A trend line from the highs. So yeah, there is some time there for it to go, but I'm guessing it should start moving towards this trend line. And if you look at the channel, let's see the channel. It's trading in this channel. Yes, in this channel. Around something like this. I mean, you can never get perfect channel, but something like this. And probably it should go here at some point, go here. This is because the fundamentals support this. And again, I'm not a SEBI registered analyst or anything. This is again just for purely educational purpose, teaching you on how you probably judge things before they happen. Because these patterns tend to give you big profits, and if you can catch something earlier, you can make really great profits. You get that additional, 20%. So again, I'm looking at this from a long-term perspective, not long. See, I never trade long-term. I look at it from a short to medium term always, and I consider anything below 2 years to be short term. I mean, to be medium term. So most of my targets usually should be within 2 years. So what we are looking at from the point of breakout is a pretty healthy target, and 18 to 24 months is a fair time to get these kind of returns. 77% returns from that point. So yeah, that's great. Where else will you get that, huh? So this is what I'm looking at, provided the fundamentals stand the way they are right now. And if the rate cut happens, this will probably go faster. This will probably reach its target faster. But as of now, this is on. I don't see anything wrong with the stock. So there is another question of the merger happening. So when the merger usually happens, there's always some kind of doubt. As you can see, the HDFC Bank, when the merger happened, HDFC Bank was on you can say, was breaking out actually. Let this load. Yeah, out around the merger time. This was breaking out of this channel. And then the merger happened, and then I guess people were not too sure and then fell down. It went up, and this is because of those quarterly results. I mean, even though the results were good, it just fell down. I don't know why. I was back there again, so I'm guessing this also will probably break out. But this is, I just showed you this because of the whole merger thing. So yeah, I guess mergers are a little tricky. Getting back to Ujjivan, that is the only risk I see in this. Something going wrong with the merger and something not happening, something going, you know, something probably not going right or not going as expected. But yeah, this looks like a good opportunity. This is a, from current levels, it's a clear more than a double up. I'm looking at almost, let's see how far it is from the current level, the target. Roughly about 150%, 1.5 times. It's a good target. And it's a good opportunity. And you start upward averaging, you can start. So what I usually do is I deploy, like for example, I've set up like say 100 rupees for this stock. What I'll do is I'll probably deploy 25 rupees now, maybe. And once I get out of a different trade, probably put in some more money. It doesn't matter where it is because I'm pretty confident in this one right now. But the most important thing is not to put more than 5%, 3 to 5% in any stock, not just this. Even no matter how strong a conviction is, no matter how big the company is, 3 to 5% is all you need to put. So you have a well diversified portfolio. Anyway, I hope you got something out of this. Um, and I'll see you soon.